should be the 21st of February. And if you guys can hear me, please type something in so I know I'm not just talking to myself. Got a little bit to go over with you guys today, and hopefully it'll be important for you. And let's see, Russ, nice to hear you. Bill giving me garbage, decided not to show because I forgot last Thursday. Jim can hear me. All right. Perfect. Well, let's get this up and going. My first question to you today comes down to plain and simple. What threats? I need to change this just a little bit. Man alive. There we go. Oh, come on. You've got to be more helpful than that. 10 Roman, let's do 16. Let's not underline it. What threats do we have to our markets today? You guys should be paying attention to what's happening. What are the main threats that are affecting our market today? And there are many of them. I'm going to hold off on that one, but here we go. So, William, perfect. Russia attacking the newly, I guess, how would I say that? Newly declared by Russia country of Ukraine, right? How did it come across? Let me see if I can find it one more time because I thought it was pretty interesting. Independence Decree, and it looks like Russia attacking the newly declared by Russia independence of, and let's see how he says it, of two breakaway regions of eastern Ukraine. And it sounds like he has already ordered forces, already ordered military into it. 1 hour ago, Putin orders forces into eastern Ukraine regions after independence decree. So it's on. It is on. It sounds like Putin, as of right now, is off, which means, and I'm going to say this politely, the Biden administration, NATO, the UN, not what else am I looking for? United Nations. I'm gonna put. I shouldn't put NATO in there. I should put Germany and France. Were part of the cause that they weren't willing to react quick enough, weren't willing to put NATO forces, their own forces, kind of use muscle with muscle on this one. All at fault for allowing this to do it. Sanctions were not going to be enough. We learned that last time. The sanctions did not help when Putin went into Ukraine last time. So let's face it. how do I say it politely? Putin knows weakness when he sees it. Germany needs their gas, as does France. Yeah, I read the same article. The short answer comes down to this. You don't go to a gunfight with a knife. You don't go to a gunfight with a knife. So tomorrow we will most likely see, an opening 500 or 600 down, and we could be down by 1,000 points by the end of the day. It'll be interesting to see if our circuit breakers are going to be tripped or not. Let's face it, didn't work last time. We'll probably lose 5%, and you'll not see the circuit breakers tripped on the indexes whatsoever. What are some other risks that we're facing? Immediate risks. There we go. Inflation. We're definitely seeing inflation. But I'm going to go a little bit farther and say consumer spending is already slowing down. And obviously, what's one of the reasons the consumer slowing spending down? It's inflation. And I could say reasons. I could say inflation, right? Let's go ahead and let's call it what it is. We have fear, worldwide fear, a war, a potential war again. I'm going to call it no more free ride stimulus checks, right? And just as a heads up, as much as you might not like the Biden administration, the Trump administration was part of stimulus checks as well, wanting to give out the free money. So, it's kind of, we're gonna hit a crash here, right? No extra unemployment checks, meaning that they have that extra $300. They're getting $600. In fact, you could stay at home and make like $52,200. It's actually $50,400 a year by not working, annualized, right? With this, taxes will be larger this year as we've already received the child tax credits. I received half. I should say half, right? Boy, was that stupid. We took half of our child tax credits. We got it in checks whether you wanted it or not. There was no way to decline it, even though they said you could. I was unable to decline it. What a joke. What a joke. One of the write-downs for our taxes, we've already received half of it. If I can go along, no more evictions. And that's not that's not what I said. How do I say it? No more free rent can't be evicted. Oh, in some states you can't get evicted. You can't evict them. It's your own personal property, but you can't get evicted. In all honesty, the next 2 months will suck. Which for us means we are going to full call our trades. Adding the short call to make up the cost of the long puts. It's just time. Right now, everything's protected except for, or I should say, need to protect Disney and Ford, I think, are the big ones that we need to protect right now by way of stock ownership. And it'd also be need to add stock/index protection for leaps. Well, Kevin, I thought you don't put protection on leaps because it's cheaper and mathematically better to do dollar cost average. That is correct. That is 100% correct. But we're running into some worldwide events that, let's face it, some people have their head in the clouds. And if I can go so far as to say some people, I found an article that I thought was quite funny. Where are you? What did I do with you? Dang it, I don't have it. I thought I had it, but I don't, do I? Well, I was going to make a comment on Kathy Woods and her CNBC, and I thought I had an article in here about her. And there it is. Kathy says her innovation stocks are undervalued and recent fund losses are only temporary. Well, boy, last year she was down over 50%. This year she's down 26%. Her fund is down 76% year to date. And it's shocking that some people are staying in with her undervalued positions. Because yes, there are some undervalued positions. But what is the question? What is the question when it comes to undervalued positions? Anyone want to make a comment? What's the comment about undervalued positions? So will they regain value? Actually, two of you just said, when will they come back and when will they regain value? So that's true, but there's something that said a little bit different because they're so undervalued. A couple of them, it's like, oh, they're worth double what they are right now. No questions asked. But usually what you hear is how long will the market stay irrational for you to be able to put up with it, right? How long can a rational investor maintain their positions in an irrational market? It's pretty scary. Let's see if I can find it. It is pretty scary. Let's erase these. Worst day, stocks, how was worst day? It's not what I was looking for. I had a pretty interesting article here that really surprised me. I couldn't validate it, so I wasn't showing it here. But ice fishing alternatives, YouTube. Boy. Stock market losing 72%. There we are. Business investor. I couldn't find this one. And I haven't purchased the insider at all, but a notorious, let's get out of this. Stock expert warns a 70% market value crash. And it's funny because he breaks down why, and it really comes down to the simple facts that technically speaking, which is theory again, right? We're talking theory. Technically speaking, if you back out the stimulus and profits made from stimulus, then the market could fall 72%. And does anyone know what that number is that we'd be looking to go to? Anyone know what that S&P number is? Where would we be on the S&P? I've got us. We're at what? A whopping 43.48 right now. What number would we be looking for? Where would that bottom be? Anyone know? I wonder if we could actually get it. I think I got to go to big charts, right? Big charts, big charts. Let's go to big charts. Let's do SPX. Let's do the advanced chart. Let's go out to 10 years because I think we'll see it there. Jar chart again. The number I think we're hitting is going to be right around here. And I think that number you're looking for is 1865. You could use a 1665 to 1685, but I believe the number is going to be an 1865. And I bet if we did longer term Fibonacci's, it's about that 66%. So if we were to take our S&P again, we're going to take our S&P at, where are we at? 14. Let's do, where's my, there it is. If we were to take the 43.48 and multiply it at 66% drop, which means you have 34% left, times 0.34, that comes out to 1478. Let's do 43.48 times 0.6. 43.48 times 0.4. That's 1739. It's actually worse than that. So it's not quite a Fibonacci. But we look to have a drop. And the S&P, it's really an 1885 number. 2, if you want to use a Fibonacci of 50 and then like 66%, it could be in that 1739 range for the Fibonacci's. Kind of scary. Kind of scary, but again, if you sat through what we've done through Facebook, it's just a matter of adding some extra protection on positions that we need to. The good news is, you know, we're mostly over to Schwab without holdovers during transfers. So we did good to get our money over before the you-know-what hits the fan. Someone asked about PayPal recently. And is it a good investment? So let me just tell you where it's at. Year to date, it's only lost 41.38%, and trailing 12 months is down 62.81%. So is it down enough? And this is where you need to ask yourself the questions. Why is it down? And really, I think there are two main reasons. Lowered guidance after raising it. That's got to be embarrassing, right? And declining, they're going to call it eBay transactions, but it's a total declining of transactions in general. It's not just an eBay transactions. And what's happening is it's the same as Square but different. People are choosing to use Apple Pay, Google Pay, credit cards with bonuses or rewards. Should say rewards. They're losing their business to better investments. Better means to pay. And what do we see in the future? I mean, in all honesty, we see less payments to, and I'm going to make the assumption PayPal is for crap we don't need, right? Stuff we find online that we want to purchase. Stuff that's not Amazon. We're definitely in a slowing economy. We're going to see that when we look at our FHFA housing price index, the Case-Shiller, the consumer confidence, but more importantly, personal income and personal spending. Our personal spending looks to be a negative number. Our durable goods looks to be significantly lower. With inflation, with the cost of essentials going up, we're not looking at a great first and second quarter this year. Higher taxes, we're not looking at having extra cash flow around. So if you were to ask me, use extra protection to make more on the way down until June, then use your cash pile to buy some significantly depressed stocks. Now, no, they're not significantly depressed as in they're sad. They're just going to be overrun with our market, With that said, new positions to look at are, I'm going to say energy, but I really mean gas. And none of those are ExxonMobil. ExxonMobil is so screwed up right now, has not gotten back to the 120s. It is not one that you want to be invested in. It should not get back up to its highs anytime soon. You want to see some of those that are more regional, that are more international, Valero, ConocoPhillips, Chevron, Murphy Oil, Marathon Oil. Those are the ones that should be your next bet. In fact, I would much rather go into gas stocks here in the near future for some upside potential than I would a PayPal. I found it interesting, and I used two different things to justify some of our positions. 10 stocks Warren Buffett is selling and 7 he's buying. But I like that he still has them. As I went through some of these, Kroger is reducing his stake in Kroger. So I see some of the people getting into retail right now, and there seems to be a push in retail. I don't see it. I don't see the advantage of being in retail right now with what the U.S. public's going to be in. I don't see our GDP, which is consumer spending, moving a lot of money to retail. I just don't see it right now. Reduced stake in MasterCard, that makes me think, hey, at least there's more room for Visa, right? Charter Communications is reduced. I want to go back up to MasterCard though. Total value stake is 1.4 billion, still has roughly 4 million shares. Oh, dang it, he's reducing his stake in Visa. Yet he has twice as many shares and 1.8 billion in Visa. It worries me. It worries me to see him getting out of Visa. Royalty Pharma, he's reduced his stake. Bristol Myers, he's reduced his stake by 76%. That is a huge sell-off. Here you have Kramer pushing Bristol Myers, not looking good. Abby, another 78% exit, not looking good. That is a throw the bathwater out with the throw the baby out with the bathwater, getting out of it. Reduced stake 85%. Marcia McLennan, he is gathering cash. He only has a $70 million stake here. Teva Pharmaceutical sold out, exited the stake, sold out of those shares. Sirius Holdings exited the stake, sold out of Sirius Radio. RH looks to put a little bit of money into it, almost has $1 billion in restoration hardware. I think this is a little early. I'm not sure people are going to renovate their homes anymore, but I know I've got some appliances I need to spend some money on. Floor and Decor Holdings. He's making a bet on the rebound that, hey, we're going to spend more money on our homes as we're going to be stuck in them for a while now. Chevron. If you're looking for an energy or a gas company to hold, Chevron is one that he's backing. It's one that I would back and like to be in. Liberty Sirius XM Group Series A. So he actually exited Sirius Radio and now went to a different version of Sirius Radio. So that's a wash. Formula One Group, new stake. And Activision Blizzard. Hey, more people are going to stay at home playing games. Pretty interesting to see where he thinks more money are going to be going to. New holdings, new stake. Buffett back New Holdings went public last year. This is the one that's digital currencies again. Notice how I did it out of Brazil, not out of the US. Less regulation. Also, where's the other one I had? Goldman Sachs. Very interesting article. Growth stocks rule in Goldman Sachs screen of biggest retail investor buys and sells. If we're taking a quick look at where retail money per advice is putting their money at, I find it pretty interesting. Biggest buy since January, NVIDIA, AMD, Amazon, Tesla, Microsoft, Apple, which we hold, Disney, which we hold, Visa, which we hold, PayPal, so we're in 3 of the top 10, Verizon, Boeing, JP Morgan, Uber, Avi, Walmart, Micron, Medtronic, Home Depot, Costco. So we also have 3 of the next 10 in Boeing, JP Morgan. We do have some Micron, we do have some Costco, maybe 4 there. And then the last 10, Nike, Salesforce, Nike, AMC, Pfizer, Palantir, United Health, GameStop, United Airlines, American Airlines, Citi. Pretty interesting when you see the dollar figures of where money is moving to itself. NVIDIA, Amazon, Tesla, Microsoft, Disney's number 5, Meta or Facebook is number 6, which we hold, Boeing, which is number 7, which we hold, 8, which is JP Morgan, which we hold, Bank of America, which is 10 that we hold. We're in 5 of the top 10 there. And really from 5 to 10, we're basically all there except for Alphabet, Google L. I like what we see and what we're going into. I like where we're positioned, but we do have to focus on more protection. As you read through the big picture, again, their last paragraph is usually pretty good. What it all means, the stock market still has some pandemic excess to work off, either through further price correction or with time-based correction that manifests itself in a choppy lateral consolidation phase. That's because earnings remain in question as the Fed goes to fight inflation. The stock market then trades at a lower valuation than it did when the year began. That much is true. To say it's cheap, though, therefore has been a real normalization of interest rates is still stretching it. Can someone tell me what is cheap for a PE on the S&P 500? What is cheap on the S&P 500? Ooh, 12 times earning. That is definitely cheap. That is definitely cheap. Let's see if I can. I want just the S&P 500 normal. Do I need to go? They do the SPY. Try the SPY here. I agree. 12, 13 would be cheap. What I'm not finding right now, though, even 17 would be cheap. So I can't find it. Let me work on S&P 500 PE. Well, here's our S&P 500 PE ratio at a 24, right? It was down to that 10, 12 range in the 80s. That's not what I'm looking for, though. I need bigger than this. That's what I'm looking for right there. Current S&P ratio is a 24.8. The mean is about a 16. I was going to tell you it was 17. The medium or average is a 14.88. So somewhere between 17 to 14.88 is your average S&P 500. Hey, it's cheap. It's time to start getting on it. A 12 actually is definitely cheap, which is 20% below the mean. So yes, when our S&P ratio is at 24.8, we're not cheap. We're not cheap at all. We're ridiculous. It seems like our S&P is held in that 20 range for a while. And let's see if I can't get a chart of it. Let's see. Nope, I don't have a chart that I could do. I wonder. I want to see it by year though. Let's see. So if we take a look, we've been fairly valued since 2019. Well, Kevin, it was at 35 and 21. Stimulus, right? Stimulus. Cheap in 2012, tough year to manage money in. 2009 is at a 70, 2008 is at a 21, and then it kind of gets to more normal. 2007, 17, 18, 19, 22, 31, 36 was expensive. Interesting to take a look at where the S&P is at, right? Let's go through some of our market crashes. 29, market crash in 2000. The 96, 97 crash, it was normal. 93 was a crash at 22 and a half. 90 a crash at 15. 87, right? 18. 83, 11. What's the difference, this big change in our S&P 500? What's the difference in understanding why is the PE so high for the S&P 500 right now? Or we could even say over the last 10 years. What do you guys think? What is pushing our S&P so high? Love it. Both of you. Buybacks. Stimulus. The calculation's off with the amount of money that's there. What else? I'm going to rephrase that. The growth in technology / finance. Different ways, easier ways to pay. I would definitely say that. Anything else? Any other reasons why? So that's a tough one. I knew someone was going to say that. Innovation, leave it to Bill, right? Innovation. If you're going to go innovation, here's where you're going to throw those type of companies in. Tesla, Apple, Amazon, Google. Yes, those are big innovation companies. And in all honesty, they're some of the richest ones as well. So I don't like that comment or answer, but you are correct, William. Innovation. Innovation is going to move that PE higher because it's going to be a higher priced earnings with new things that are coming out that makes our job easier. I agree 100%. All right. I'm doing a lot of talking today. Let me go through a couple things with you. Do read through the big picture. Wow. We are bearish. We are bearish. We could probably lose 1,000 points tomorrow, especially if Russia is truly attacking or moving troops in. As soon as a bullet is fired, we're in trouble. So I'm going to take a peek. The Nikkei is down 1.75%. Shanghai is down 0.72. The Hang Seng is down 2.22%. We are probably all going to be down 2% or more tomorrow. DAX lost 2% or is down 2%. FTSE's down 0.39. The CAC will probably be down as it opens up as well. We're going to be down. We're definitely going to be down. So looking for a bottom, 33,200 will probably be tomorrow's lows. If we pass down to it, we're going to be looking at over a 10% correction, right? We're going to be looking for a bear market. A 20% bear market pullback is where we would most likely be. Year to date, we're down 8.76% on the S&P, but we need to start looking for bottoms. The S&P probably going to go down and touch the lows at 42.22. It's bearish. If we go below that, we'll be in correction territory at over 10% and looking for bear market territory of 20% before you'll start seeing that buying. And the worst one, right? the NASDAQ composite here. NASDAQ composite has gotten beaten up. The NASDAQ composite year to date is already down 13.40%. By the end of this coming week, we could definitely see the NASDAQ in bear market territory down over 20%. Those would be my expectations due to the risks that we're involved with. Last week, where the S&P in February, I said down 3%. I probably need to move that to a 5%, even though we're down 8%. In fact, I probably could move it as much as an 8%. It could be worse. It could be a 10%. But our 1 month right now on the NASDAQ is down 6.66%. Our 1 month down on the S&P right now is 4.9%. So I'm just going to stick with 5%. It's going to be more, though. I know it's going to be more. It's going to be more tomorrow. Earnings. President's Day today, which is nice to have a day off. I have really enjoyed this weekend. So has my kids. Home Depot, KBR, Macy's, Mosaic, Palo Alto Networks, Toll Brothers, Rig, which is the Tesla. It's not Tesla. Someone tell me what Rig is, because I have a brain fart right now. Lowe's, Coors, TJ Maxx, eBay, IMAX, Vacation, which is Marriott. Not Marriott. Vacation is not Marriott. What is Vacation? Vacation is, it is Marriott. Come on, Hurley. Transocean. Thank you, Bill. Rig is Transocean. Bud, LNG. Interesting to watch LNG this week. NetEase, AES, Dell, Intuit, Monster Drinks, Baba and Square are our companies to pay attention on Thursday. Foot Locker and IEP are coming up on Friday. And for those of you, Kevin, what is IEP? It's one I'm just kind of looking at, but it's Icon Enterprises that I'm paying attention to. Icon Enterprises, I'm going to watch to see how he's doing. Not a whole lot. Consumer confidence on Tuesday. Thursday, GDP new home sales will be big. And Friday, durable goods, personal income, personal spending. What else do we have here? Stocks at risk of bearish head and shoulders pattern. Bank of America chart says, I just want you in here to read it. Global investors snap up Chinese stocks despite market declines. Again, I'm putting this in here just because I'm following the money. It's why we're still in and believe that that Baidu still has an opportunity, huge opportunity. The 10 stocks Warren Buffett's selling and others, I went through all these with you. Dow sheds 200 points on Friday. It was one of the worst days. I had that recently, but just to pay attention to those Ukraine, Russia problems, the growth stocks I have in there for you as well. Any questions that you guys have for me that I can answer for you? Any questions you guys have that I can answer for you? And interesting, William, I can really count on you, huh? Why are you adding short calls after the fact or tomorrow? So William, great question. But why I want to do it tomorrow? Huge volatility increase with Russia invading. Huge volatility. We're going to get a better price tomorrow on our monthlies than we would have got any time last week after the a week of time decay. So it's volatility. I'm looking for volatility to take over. And I probably should stick that. Let me cut that off. And I'll paste it right there. And I need to get invading. So, William, that's why. Hate capping upside potential. Hate having to roll for losses. But we're going to get a big jump in implied volatility and a bigger credit. That's funny. ADP actually says better now than never. Abraham, thank you so much. Let me show you guys one other thing that I had out here. And Abraham, you asked me to go through this. I found an interesting article I was trying to go through. 3 highly profitable stocks to buy that Wall Street thinks can soar 80–90%. When I was looking at a stock to purchase, it's really not Moderna. I'm not too interested. But Mercado Libre, MELI, was brought up to me by Abraham. And I'm doing my work and research on it. Really, it's got its butt kicked. But it's an expensive stock. $937. Could go up to $2,000 again. Could be 100% return. If we were going to do 100 shares, and this is the reason why it's not on my list, 937 times 100 shares, we're looking at $100,000 to be in it, and we're really not looking at a way to protect it. So Mercado Libre might be an interesting one that I could use Mercado, right? Mercado Libre would be one that I might use on a leap long call that has some great opportunity in it because of the industry that it's in. It really could move pretty significantly. Then the last one was PayPal, but they contradict themselves. It's like, hey, it's 8% upside, but user growth is going to slow, so it sucks. Not really good, right? So just found it interesting. An article as I'm doing some of my research today. Abraham said they dominate e-commerce in Brazil, Argentina, Mexico. They kind of dominate e-commerce in South America, right? South and Central America, they're it. They're the one. They're the Baidu of Asia, so to speak. I'm just not sure. I'm just not sure if we see a world correction, if we see a global slowdown, they probably won't do as well. But they do have the opportunity. I definitely invest in them over PayPal right now. All right. Are there any other questions that came in? Or anything that I missed? In fact, Jim Kohler made the comment today. A risk was cyber security, and I don't quite see that just yet on the U.S. side that it would affect the U.S. economy, but it always does. So it's not that you throw it out there or you don't consider it, Jim, but it's not one of the big ones that I think moves our markets hundreds of points like we're seeing today. The good news, the back end of this year could be a great year to pick up some more money. Invest in things that are down and see a rebound towards the end of the year. That's not true. The last 6 months, July through December, could be a great rebound for this year. All right, no other questions, guys. I appreciate you being here. I look forward to talking to you guys or seeing you on Thursday. Hopefully you enjoyed Keith's last Thursday. Hey, here are bullish trades that you do on bullish stocks. No more questions. All right, I'm trying to delay. Guys, have a good evening. Appreciate everyone being here. Happy President's Day. You guys have a good night. Look forward to seeing you on Thursday, and we're going to be ready to keep adding protection as things continue to fall. Good night, everyone. Bye-bye.